Welcome to the Outlier Trading Room US Investing Championship invitation only live stream. This is where we help you save time, make money, and start winning with less risk. So go ahead and subscribe if you haven't already. We're so close to 50,000. You need to be one of those people with the 50,000. Let's do a quick market update because there's a lot going on today, like every day, right? Let's pull up in the market right here. What's going on? A pretty broad-based rally is what's going on. The S&P is up nearly 1 percentage point today, and it's everywhere. It's literally everywhere, except for the one GD stock that I'm holding right now. Son of a... Isn't that usually how it goes, right? The one stock that you hold is the one that goes down when everything else is going up. Yeah, welcome to real investing. Welcome to the real world, right? This is not the way that the YouTube fake gurus will tell you, right? It only works in the up direction for them. That's not the real world, right? Speaking of the real world, one of our friends, Andrew, where's he at? Andrew O'Connell, that we interviewed just a couple of weeks ago. I subscribed to his Substack, and I found this really interesting because he had been negative for the year so far. He had been a pretty hard drawdown. He was down 31%. And in April alone, he made 50%. In April alone, he made 50%. So now he's up over 10% for the year. And that's what trading is like. There may be a long time where things just don't feel like it's clicking. And then in the span of 1 month, he goes from down 30% to up 10%. And listen, that could totally happen to you. That could totally happen to me. That is the reality of trading. So it's really cool that we've made some friends that are actually competing in the real world in investing. So I sent Andrew off a congratulatory email. But yeah, back to the market, new all-time highs. It seems to be pretty much everywhere. And I want to see what's going on Wall Street bets, right? Micron. Did you see Micron right here up 11% today? What in the wide world of sports is happening with Micron? I don't know what's happening with Micron, but let's go into the Outlier dashboard for Micron. Let's take a look at it real quick. Let's go to Micron. By the way, you can access the Outlier dashboard and get these buy and sell signals like this one right here on April 13th, which is right there, to today. So where would that be? Hang on. Let's look at that real quick. April 13th to today. Had you taken that, your trade would be up 50% so far. And if you had been buying options on this, I mean, who knows? That would have been up hundreds and hundreds of percent. A really, really incredible move on that. Hey, Brian says he's up 78% in April. It's all coming together. Yeah, well done. Mark says, I had a wonderful day with Micron. Yeah, way to go, guys. It's Wait. Linda says, I've rolled it 5 times and she's 4K profitable on it already. I feel like that's worth 82 cents a day. I don't know. I feel like it's worth 82 cents a day. Congratulations to all the people who took that buy signal in Micron because, man, is it running. That's the top stock over here. Then Palantir's next. Let's go look at Palantir real quick. Not PLNTRE, it's PLNTR. Oh, that's not so good. Palantir is on the opposite end of that spectrum, and it had earnings. It had earnings, right? Google had earnings, and it seems like Google was the one stock that went up after earnings this quarter. It seems like every other stock got hit with earnings and got monkey hammered down bigly and badly. We saw one yesterday. It was CNA. This could be the biggest, nastiest red candle I've ever seen on earnings. Yeah, that was gross. An order block city right there. So, Micron is really the big winner of the day for sure. Intel's also up bigly. What's going on? You guys tell me what's going on with these two stocks. Man, Intel's on fire. What about that buy signal? Intel. Let's go look at this one real quick. Here we go. This is April 6th on Intel. April 6th on Intel. Gapped up after earnings. This is what's called a gap and go. Don't be scared of gaps. In fact, this gap right here was a 20-something% gap, a 20-something% gap. And I can tell you a lot of people are like, there's no way it can go up after that. It has to crash right back down. Remember how I started off this video? I was like, it's new all-time highs. It has to crash back down. No, it's bullish AF, bullish AF. Gap and go. Gap and go is exactly what we're looking at right here. So what is that percentage term? Only 115%. Golly, this stock has doubled since the buy signal came through. You tell me, do you think that's worth 82 cents a day? Put 82 in the chat if you feel like Outlier is definitely worth 82 cents a day, at the least, at the least. What else is going on? We talked about Palantir. What about SanDisk? That's the next one here, SNDK. I know for sure this one is not a super old stock, so we don't have buy and sell signals for this one. We need at least 5 years of data on this. SNDK. But looking at this one, another one that's just ripping higher. Another one that's just ripping higher. But you know what stock is not ripping higher? The one that I bought, dang it. It ripped for a minute and now it's pulled back in. So let's get back to our trading plan because we need to reduce risk before adding any new trades. And the most important part of the plan is playing on the plan, not going plan. Listen, if I could have planned NVIDIA going up like SanDisk, going up like Micron, going up like Intel, I would gladly have done that. But that's not the reality of trading. We don't get to predict the future. We just have to react to what is happening. Just react to what is happening. And we're looking at NVIDIA right here. Let's go look at our exit signals because we have an exit signal today. Our first exit signal at the very top is called the outlier sell signal. And if we go to NVIDIA, let's go take a look. What do you see right there? A big old sell signal. A big old sell signal right there. Now, of course, would I have loved to get out right here? Yeah. Who wouldn't have loved to have gotten out on this candle right there? But it didn't hit my exit signals. Now, remember, the exit signals have not changed. These have been the exact same exit signals that I went into the trade with, and they're the exact exit signals that I'm taking out of the trade with. Nothing changed, right? You have to be rigid in your plan, whatever your plan is, and flexible in the outcome. And of course, like I say, if I could have seen the future, I totally would have sold out on that. But I can't do that. Neither can you. So Outlier's got a sell signal right here. I'm going to go sell it right now. So I'm going to go to NVIDIA and I'm going to go send to ticket. And down here, there we go. I'm going to sell. I only had 3 contracts on this one. And I'm just going to hit the 252 mid price and see if we can sell out of it at 252. And it looks like the order is working. Come over here to orders and nickel it down. And I'm out at 252. Okay, cool. So let's go now. Before we go any further, I need to wait for the cash to update real quick. Now, 100% transparent with you. And that's the whole point of this, is being transparent and showing you I'm in a drawdown. Am I in a big drawdown? No, just like 5%, maybe less. Tiny drawdown. And that's why I led off with our friend Andrew earlier, who just put a 50% month in and made up for his 30% drawdown. And now he's up for the year. That is the reality of trading. Unlike every fake guru on the internet who only claims to have wins, this is the actual reality of trading and the reality of trading in the US Investing Championship. Hang on a second. My phone, for some reason, started playing video. That was weird. Like super weird. Okay. Okay. Now, going to here, I've got some cash. I have $778 in cash. So I'm going to go buy some SGOV right now. I'm going to go buy some SGOV right now. SGOV is currently trading at $100.43. So I'm going to say SGOV, SGOV. And I have $700 in cash in this account. And so I'm just going to say 7. I can't get 8. And then I'm going to say my limit price, 100.42 or 100.43. Hit buy. And I'm filled at 100.43. So I'm 100% into the market on SGOV now. Like that's exactly where I have $75 in actual cash left. Everything else is in SGOV. Now, why SGOV? SGOV is going to pay roughly a 4% APY dividend. So I'm going to be making money while sitting in cash. So let's go fill out the spreadsheet real quick on where we're at. And like I say, I have nothing to hide here. This is something that the reality of trading you have to deal with. If I could say, hey, everything just is all sunshine and rainbows, it would be great. But that's not the truth. So how many shares are we into SGOV with? 471 at the average cost of 100.41. Okay. 471 at 100.41. Okay, cool. And it's currently at 100.43. And we'll make this green because it's open. And we'll come over here to NVIDIA, which we finally closed today, the 5th, Cinco de Mayo. And the closing price. Now, remember, I had rolled this enough times where it was a 100% free trade. I didn't have any risk in the trade. It was going to do whatever it was going to do, and I had already gotten paid for it. So the order, I sold it for 252. 252. So my total gain on the trade was 39%. 39%. Is it less than I'd want? Of course it's less than I want. But remember, I can't see the future. I didn't know when this was going to happen. You didn't know when this was going to happen. I'm sure there's some fake YouTube guru who knew exactly when it was going to happen, but he didn't let me know about it. He didn't let me know about it. So 39% gain on the trade, a 4% overall net gain. What I want to do right now, since this is full transparency, is see how far off we are. 47,378 to 47,419. Okay, so we're within $40. Okay, good. That means that's just like the fees associated with this. So let's just put like $40, 379.64. In fact, let me do this. I'm gonna get like perfectly down to the penny where it is right now. And then tomorrow, what I'd like to do is go through these trades and talk about what worked, what didn't work. But the thing is that I follow my plan to a T. Whatever your plan is, you've got to follow it to a T. Okay, so 47,419.64 minus actual value in the account is 47,376.09. So 43.55. All right. So we've racked up $43 in fees so far this year. And so, I don't want to put it on that. It makes it look like a loser. Let's put it on this one here, 43.55. There we go. 47,376.09. 376. Okay, we're a couple pennies off, but that's fine. Okay, cool. So that's where I'm at right now, which shows a 5.25% decline. Now, where did I go wrong? I don't know if I went wrong, right? I don't know if I went wrong. My 19 trades that I put on in Plan M. Now, remember, you need a sample size of at least 50. I've only got 19 here, right? You could flip a coin 19 times and come up with a 47% win rate. You totally could flip a coin 19 times and come up with a 47% win rate. You need more occurrences built up over time in order to see your edge play out. And like I say, I definitely want to do a deep dive on these tomorrow, because these right here, I'm definitely disappointed. Of course, I would have loved to have seen a better outcome here, but let's be realistic here, right? Let's be realistic. Of these account impacts, right? There was 3 that I would consider break even. SGOV doesn't count in that. 3 I would consider break even. There was 1, 2, 3 small wins. There was 1 big win, and then 1, 2, 3, 4, 5, 6 small losses. Now remember, my small loss is going to be different than your small loss, but this is how I look at it. If it did less than 1%, or I should say 1.99% gain or 1.99% loss, anywhere in there, I would call that a break even in my portfolio. Now, this is my personal risk tolerance, a 6% risk tolerance on all of my trades. Not any one of these was 6%. Not any one of these was 6%. So all of these are small losses. If it's greater than my risk tolerance, that would be a large loss. And so if we apply the same logic here, anything that's 6% or less of a gain would be considered a small win. Anything greater than 6% would be a big win. Now, this is also why I like to have this, what's this called? This standard deviation of returns, right? This distribution of returns. Because this shows us like the reality, right? We've had 1 big winner. We have not had any big losers. We've had the losers that we had accounted for. All of them were less than our percentage of risk. And then we've had several break evens. This is actually what trading looks like, right? You have more big winners, lots of break evens, and you're going to have some losers. So the only thing that I need is more frequency. And of course, I want to go through these one by one tomorrow, looking at all of them and see, you know what? Here's the question you have to ask yourself. Was there a flaw in the plan? Or was it just bad luck? That's on the losers, right? Was there a flaw in the plan, or was it bad luck? Looking at these, is there something that we could have seen that would have helped us have bigger gains, or anything that would have helped us have smaller losses, right? But of course, you've got to look at it from a broad perspective. Test the theory, right? If it comes through and it's like, hey, anytime you see a stock go up 5 ATRs, you need to exit as soon as it hits 5 ATRs, right? That sounds great in theory, but now you need to go back and you need to back test that. And you need to say, okay, if a stock goes up 5 ATRs, you probably should close it. But then you got to look at how many times did that happen. Google went up 5 ATRs and then went like crazy, right? Now I got out before earnings, but if you apply the same logic of hey, I'm going to hold through earnings. And then if it goes up 5 ATRs, I'll close it. You're going to have vastly different results. You need a large sample set to come up with a backtesting result. So we're going to go through those tomorrow. Look for any flaws, right? Of course, the reason that I do this with as much transparency as I do is because I want you guys to see the reality of what trading looks like, right? Will I have gains later this year? No doubt about it. Will I have losses later this year? Absolutely no doubt about it. But the number one thing is you must have a plan, whatever that plan is, and you must follow it to a T, or you never had a plan to start with, right? If I had decided that I was going to get out on this candle, or this candle, or that candle, or even that candle, I would not have followed my plan. I would not have said ahead of time, this is where I'm going to get out no matter what. And I knew that before I got in. So it's great to share this with you. And of course, like I say, not the outcome that I wanted, but this is the reality of trading. Would I have liked to change it? Of course. But also, we're looking at a really small sample set. That was just 13 trades in the last few weeks. And I would call that successful. Remember, there's good trades, bad trades, winning trades, and losing trades. Okay. A good trade, regardless of the outcome, regardless of if it's a win or a loss, is still a good trade. A bad trade, a good trade is regardless win or loss, is if you follow your plan. If you followed your plan, it's a good trade always. If it's a bad trade, that's where you didn't follow your plan. You deviated from the plan. Even if it was a win or a loss, it was a bad trade because you stopped following your plan. Now, I know that the trolls, they're already typing it out. Oh, you think you're so smart. If you're so smart, why aren't you up hundreds and hundreds of percents? Because I'm not a fake YouTube guru. Okay. There's plenty of other jackwagons you could watch on the internet, but I really appreciate that you're here because we're showing you the reality of what that looks like. And if you're ready to save time, make money, and start winning less risk, click one of these two videos and we'll talk soon.